And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in.
And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to a very special episode of Make Hoag Money. We've got a very special guest with us this morning, Anne-Marie Baiynd, the author of the trading book. Got it right here. Highly recommended. We're going to take a look at what's going on in the markets, and there certainly is a lot going on, and answer some of your questions. As always, Make Hoag Money is for educational purposes only. There's no suggestion or urging of purchase or sale of anything we're doing here. Risk is part of futures trading. You'll always run the risk of losing more than your initial investment. And we, of course, know that simulated trading has certain limitations because there's no accountability, no rules, and no consequences. Trade the trading combine. We'll put up the risk capital for you. Risk capital is money that you can't afford to lose. Basically, the rules of Make Hoag Money, as usual, kindness and respect are expected above everything. There's always differences of opinion in markets. It's what makes them so good. Only Anne-Marie are going to be able to talk this morning, but we're going to be, of course, talking decisions, context, and everything. We're going to discuss trades. Maybe we'll get some voting in the chat here in YouTube to see if we take any trades today. Of course, we're not going to trade just to trade. Here is the platform. Anne-Marie, it's a pleasure to have you here. How are you this morning?
I'm very well. I'm excited to share market chat together with everyone that is taking the time to be here. It's always a great pleasure. We actually are popping right at a very important space and then dancing around it. This is where the monthly open of the continuous contract is showing as the day that we open. So we should see a little bit of choppy action right around that 40.95 area. See how the traders behave at that. So, oh, you've already got a line there. That's, oh no, that's the actual price. There we go.
Right. Yeah. This is the continuation chart. So this is the area you're looking at right there.
Exactly. So it's a big battleground. You know, my suspicion is that we give it all back because of how thin the volume was. You were talking to me about the dome this morning. That's really very interesting. I'd love for you to talk about that a little bit and what you saw.
Sure. And, you know, if you were looking at the overnight profile, let me see here. This is the micros. So as the number was coming out about 729, if you look at the dome was single digits, 1, 2, 3, 4, 5, 6 bids or offers per price. And right before the number, the spread between the bid and the offer was about 6 or 7 points. And that we don't see in the S&Ps very often, right?
I'm not sure if I've ever seen a spread that big looking at the dome. I don't remember that.
And then look where we are right now. This is the overnight profile. We missed a whole bunch of prices. These prices never even traded on the way up.
Wow. Well, we're definitely filling it in now.
Let's see what it looks like in the S&Ps. There it is. Yeah, we still have, well, we've filled in pretty much all of the holes, but these were prices that never traded on the way up.
It's amazing.
It's just amazing how illiquid this market can get when everybody is expecting something big.
Yep, for sure.
So
For
we've got the weekly kickoff high here in the S&Ps of 4168. It traded up to 4180, but if the market was liquid enough, it wouldn't have gone that far.
Yeah. You know, that's a really good space to talk about why it is that we have to temper that psychological feeling that we have that goes, oh my goodness, I've got to chase this. It's going to leave me behind. When we see a general bearish market like this, we really do have to think to ourselves, is this normal? And if it's not normal, which it wouldn't be normal for it to move that aggressively, that quickly, and you have a tendency to move a little more slowly into your trades, it's always a good plan to wait. If you are a quick trader, which I always admire those guys that go, yep, there it is, boom. And that decision-making skill that says, I'm getting in, they also have that decision-making skill to go, yeah, I need to get out. And so the two of them coming together is going to give that quick snap trader a lot of room to move in the market. But for those of us who really think it through a little bit more, this is always a space that goes, you know what, pump the brakes here and let's see exactly what's happening, because we really didn't get any actionable news and the market moved like there was action. And all it is people trying to get in front of what they think Jay Powell's going to say on Wednesday.
Okay, hang on a second here. Now we're starting to get a little bit of a delay. Anthony, I just did something to maybe take care of that echo or delay. Let me know if that works. It may just be on Anne-Marie because I'm just trying to boost it a little bit. So we'll see if this helps. Anne-Marie, the things that you had just mentioned are, of course, extremely important. Do you participate in these types of very volatile moves on the fly? Like you mentioned you're a longer time frame trader, a little bit more thought to your trades. You didn't do anything today, did you?
I didn't, but I have in the past. The reason that I didn't today is because I had a lot of balls in the air this morning, had a lot of things going on. And when you set about to trade this kind of price action, what you really have to do is not get distracted, right? That is a killer. You want something to just gash a big giant wound in your portfolio, is take a bunch of positions and then don't pay attention, or take size and don't pay attention. And for me, I always know that if I'm going to trade something like this, excuse me, hiccups, I'm going to say to myself, I want no distractions. I want nothing on Twitter. I want nothing on the news. I want nothing. It's just me and the screens to make that choice.
Yeah, because a move like that would certainly require all of your attention.
Absolutely. Absolutely. And, you hope that you get the right, the right entry when you go in, as the speed that it's moving. If you're on some kind of lag, right, and you've got 200 milliseconds or 500 milliseconds before your entry goes in, you could actually end up being in there 2-3 points higher than you thought it would be. So that's also something to take into account in terms of saying, hey, am I going to chase this over? But coming back to those bigger time frames, I would never have taken this position if it didn't already break up and over the monthly open. So I'm always looking at the big numbers. My goal for entering a trade is do not enter unless it's near a big number. What's a big number? A monthly open, a monthly close, a monthly high, a monthly low, a weekly high, a weekly low. Not things like my trailing VWAP or an anchored VWAP or anything like that. If I'm not positioned in the early morning near a big number, what it says to me is I'm potentially expanding my risk. And so for me, because I'm getting way more of these gray hairs, my time to get in and play around gets tighter and tighter because I am constantly looking at this going, okay, I'm paying my bills with this. And then this portion I'm setting aside for a life of greater leisure. And so I'm going to be very, very deliberate about my entry points. And really that's kept me on the right side of a lot of trades. And when I'm wrong, I know very quickly. So I end up having a lot of upshot to my position with limited risk versus saying, okay, that's a move, that's a formation I'm getting in right now.
Okay. Imagine you're holding a short position and you have a stop market in, and the number comes out and you end up with 15 points of slippage. It's just not worth it to me. I've taken some big, some positions into some big numbers. I've had some wildly successful days. I've had some absolutely horrible days. And if I total them all up over the years, I'm about even. So
that is a way better statistic than mine, because I have traded those getting in front of a position. I'm going to tell you, I've probably done it 50 times. And without exaggeration, 40 of them have been bad trades, simply because I did not see my risk. My risk was too wide. I ended up holding too long, waiting for reversal. I'm awful. I will never step in front of a big number like that because I am bad at it. And I know in my wheelhouse, okay, you really suck at that. So sit back, just wait for a minute. Yeah.
And that's our goal as traders, as Jared Tendler says, to suck up a little bit less every day.
Exactly. I love that. It's so true.
So, there was an opportunity as the regular trading hours opened up. Fred Decker was talking about, is it advisable today in crude oil? And I'm pretty sure he was talking about the S&Ps as well. The opening range trade, as we've opened well out of balance, actually ended up working out very nice for us today. And it was actually relatively small. It was 6 points. 6 points of risk for all of this.
That's fantastic, actually.
So, and what is the most important part of the opening range trade? It allows us to limit risk. Anne-Marie, you and I are such similar creatures that way. It's, what is the risk on this trade before, well, what's the potential profit?
Exactly. Because, here's the thing. If we weren't naturally optimistic in life in particular, it'd be really hard to get out of bed in the morning because life can really kick you in the teeth. And so we're naturally optimistic. So we're always going to think, hey, what can I make? But in this business, when we've been around for the decades that we've been around, we know it's not what you think you know, it's what you think you know that just ain't so, that ends up coming up and getting us. And that's why we, it's definitely not a sexy way to look at the market in terms of that, but you've got to look at risk. Managing risk will help you trade another day. The day could be bad, but it won't, have you on the floor with a bottle of whiskey or whatever else you might be after.
Well, that might happen anyway, but anyways. I like the way you put that. I mean, worrying about the risk isn't sexy, but it's so important. It's the most important thing.
Without a doubt.
Okay.
So now that we've come back into this range, what are you thinking?
Well,
around in these parts.
we got the opening range trade, and that was a pretty good opportunity for us. The weekly kickoff high is still in play for us today.
Mhm.
Where was the high? 4107 was the high of the opening range. So we were already quite far away from it, and below your start of the month.
Mhm.
I like the idea of looking at the start of the month, 28-29, for an opportunity, because it's already kind of getting close to. Hang on a second here. Oh, I got the wrong month on this this 1 minute chart. Something's wrong there. Hang on. Hang on.
The one on the screen is that's the daily. Yeah, that's the right one.
Okay, so 35 to 41 is still a 6 point. 35 to 41. 35 to 41. And the beginning of the month right here is 41-29. So we're within reason for a move up to this area, including the opening range, to look for an opportunity for a continuation to the short side. Anne-Marie, you and I were just talking about how often one extreme of the initial balance remains the extreme of the day.
Yes.
We've already taken out the low of the initial balance. The high of the initial balance is the high of the regular trading hour session. So if we get up to 2030, we're here. We're still within the realm of possibility and below the opening range and below the high of the initial balance. And we have risk management. Did I talk you into it? If we get there?
Potentially. The question is, if we talk about it like, if we talk about the battle between the buyers and the sellers today, would we, now you've got the ESH open as 4123?
4135 to 4141.
4135. That's the monthly open you have for this one?
The March monthly open for the March contract.
Okay.
Is 31.
Okay, yeah. Let me get myself back here. Aha, okay. All right, I see that. Now I see that. Okay.
So it is different on the continuation chart.
Yes, I just slipped to the one that's not not a continuation. So, because I believe that this was a bit of a nonsense move, there's a little bit of a fundamental thought in my mind that says, my flow either has to go all the way back down and fill in this horrific looking profile, which would be really nice if it came and did that. Mm-hmm. But at the same time, because I think a lot of people are sitting sideways in the chart, maybe it's not going to head back up there. Maybe it'll just continue to fade. So when I have this question in my mind, the first thing I would look at is, how are the traders positioning gamma. And so this is one of the things that I talk about all the time. And I know a couple of folks had some questions about what's happening with overall flow from this perspective. So my suspicion is that the traders are going to have a little bit of trouble at this 40.80, but let's have a peek at, let me show you what.
You want to show your screen?
Yeah, let me pull the right picture up first.
Let me know.
And then we shall see what flow looks like. So, okay, I believe, where did my Zoom go?
You ready?
I think so.
Okay, go ahead.
All right. So here we are. So one of the things that I look at here is a little tool that measures the net put call business, right? And that really helps me with gamma, and it tells me where they're positioning. So a couple of things here, I'll see negative flow moving down from this edge. So I'll know, even if I'm not looking at the chart, I will know that the market is slipping, because this being the call premium line is telling me they're not buying premium, they're actually selling premium today.
Okay.
That on the call side, but as this moves up, they're buying premium on the put side. And this is the actual zero line. So they're not buying a ton of puts, but they are selling quite a few calls. And so the next thing I will do, let me make sure I have that up. I don't. So let me take a peek at this and get the flow. If you don't have a special tool.
Unusual whales.
Yes. And so that's really great. It's a very reasonably priced tool. And it tells you what's going on in terms of gamma flow. And there are a lot more operations out there that charge a lot more and give a lot of fancy things, but not these guys are just enough for me. I don't really need anything super fancy at all. But let's say you don't have it and all you have is option chains staring down your formation. Let me share this screen next, and we will see SPY. Beautiful. All right, can you see the screen yet? No?
We're still seeing the unusual
whales. All right,
market tide.
All right, yeah. So let's now take a peek at, let's share a different screen, new share. This one. All right, you can go directly into the option chains and you can look at the ones that are at the money or nearly at the money on both sides, and you can see where they're crowding in. Now, here's the amazing thing about these kinds of options. This marker over here, let me close these down, move us out of the way. This one is open interest. It tells us when we start the day, how many options were sitting in the books. Look at the 400 this morning and the volume that's moved in. Okay, so that's almost 28 times the amount of volume that they had from this area. This is almost 95 times the amount of volume. So you know they're crowding around here. Okay, so you can see these traders coming in, and some of them are going to be buying these puts and some of them are going to be selling these puts. But you can see where they're crowding through the day. And that little chart that I showed you adds up all the volumes from the call side and the put side, and it tells you what numbers are happening, right? So somebody maybe early this morning when this first came out, they either bought this or sold it. Who knows which one they did at this gauge, but we can tell the open interest was only 300 and then now it's 1600.
So big jump in interest in that area.
Exactly. And so we can see right now, to me, on the put side, they're looking at trying to hold 405. And on the call side, we can see 163,000 over here at the 410, right? So 410 was that area everybody was talking about. Absolutely everybody just chit-chatting about that area. Right here is where we're seeing a lot of traders just trying to toe the line. So from that, and then understanding that what I'm seeing on my unusual whales back here, and let me refresh the chart so we can see what's going on. Refresh.
Anne-Marie, when you have a second, would you just equate what the strike prices for the options are in futures prices?
Oh, perfect. We don't even have to equate. Let's just go look. Okay, so let's go back here. And let's just share. Okay. And
Dan's asking would that be similar to the put call ratio?
Yes, absolutely. Absolutely it is. All right, so you can see us chopping around here. And so let's go to the options that are expiring today. And let's look, see what they're doing. Interestingly, SPY options are going to move the market more than these futures options will, simply because there's tons more volume. Okay, so let's take a look. We've got 2,400 here, sitting at 40.50. And we've got 39.61 sitting here, also at 40.50. So they're going to be battling around this zone right now. Now, we're all the way here at 40.80 and some change, right? And so what we really want to do, let's look at, if you have Thinkorswim, you can see things like, look at this, 97,000 puts, 31,000 calls. It's a lot of put action. So this is overall that's sitting here right now, right? And so the big question is, what would the pain trade be if we know overall puts are 97,000 and calls are 31,000? The pain trade is going to be higher, right? Because people are positioned in that area. Does that follow track for us?
Makes sense.
Right? The pain trade, the trade they're not prepared for, will be the trade to the upside.
To the upside.
Right? And so because there's such a big difference, we could see a pretty spectacular skew in price action overall, right? So we had to be a little bit careful when we're taking a look at these chains and saying, all right, what does that mean? That means that 40.50 is likely the floor here on this. Now, the last thing you can look at is the SPX, right? And so if we take a look at the SPX and see what they're doing, again, it's going to be nowhere near the amount that the SPY has. And let's pull that down. No, here we go, right? You're looking at 11,000 at 40.30, 14,000 at 40.50, 26,000 at 4,100. They're probably selling those today, to be honest. I mean, I think that would be a nice trade. Now, the question might be, if we're at 40.80 and we see all the contracts floating around 40.50, Does that mean that we have the potential to fade into that area? And the answer is yes.
Now, these strikes are based on December contract, correct?
Yes, because these have not, these things don't, when is the, yeah, these things have the natural cross. So yeah, there's about a 35-point difference between the two, right? And so, but the ES contract is the H contract, and that's the one showing everybody, oops, that's the one showing everybody piling in at around that 40-50 area. Let's do that again. So you might go, for heaven's sakes, Anne-Marie, what? That's a lot of numbers. I'm looking at a lot of things. What could I take away from this? The big thing for me always is, before I jump in, I always say to myself, what's my competition look like? I never go, oh, okay, I got my plan. I'm ready to go. I always go, what chess pieces does my opponent have sitting on the charts? And am I able to stick and move, right? And for me, that's always going to come to, okay, where are they positioning with the most heat? And we can see that they continue to crowd around this 40-50 area, right? There are 200 more contracts here than were 10 minutes ago when we started talking about it on the put side. So my suspicion is wherever they're crowding is where they're going to move, try to move to. And if they get close but cannot go, then they're going to turn around and start moving in the other direction.
The other direction.
Exactly. And so what we don't think about it as, where are these guys going to go at the end of the day? Because most of them cover before the end of the day. They don't take it to expiry, not one single bit.
Sure.
They will come close to the edge of the day, see what's happening from the push, and then decide what they're going to do from there easily. So here we are down at 40.80 and some change. We're sitting in between here, and price action is okay, but there's not a ton of traders coming in here going, I'm buying this 40.80 that it's going to hold.
Okay.
They're selling the 40.50, or maybe they're buying the 40.50. I have no idea which one they're doing. They're just, somebody's long, somebody's short. We know, that's all we know about it. And we know it's 10, 20 times the amount of what it was when we opened up. And so we've got 6,000 contracts all the way to 4,100. I'm thinking they're selling that. Here is 4,000. So that's probably a naked strangle. That means they've sold the 4,000 here, and they've sold the 4,100 here, and they're collecting that premium as it gets to the close of the day. They're going to be able to cover it, maybe for half the amount that they sold it for.
Right.
Which 50% return in a day? Hey, that's great money. Absolutely. That's awesome. But that really is, we hear gamma and it sounds super exotic and all fancy pants, but really all we're doing is looking at the put call ratio. But more than that, we're going directly to the strikes and we're saying, all right, how much confidence do the traders have in this number? So for me, I'm going to look at this and I'm going to go, you know what? I'm going to think about a short, right? Because what I'm looking at is traders being all the way at 40.80, and some buyers are coming in, but not as many as those that are sitting on the put side, right? So I'm going to take a guess, and that's really what it would be, a guess based on the weight that we're going to lose this 40.80 level that we've been dancing around for a while, and we're going to start coming in to that number. That's my supposition based on what I'm seeing here, and to include what's going on in the flow. The flow is really telling me exactly what the traders are trying to do, but in picture form.
Right.
And as this stays negative and more puts are getting bought and more calls are getting sold, I'm going to sit in the space of, you know what, the market will be at my back if I'm positioning a short opportunity.
Because that's where the pain is.
At this point, that's where everybody's leaning. They're leaning into that, right? The pain trade earlier was higher because everybody positioned into that short, thinking, oh, wait, what if the number's bad? I've got 1.5 billion under management here. I've got to hedge. And so as they hedge, and they have to take off the hedge, and maybe they use the SPX or the ES to hedge, then they have to immediately buy to cover.
Right.
And that's what sends it up. And now we're sitting in sort of a normal space where we're giving back. Everybody's continuing to unwind their hedges. And so that's why we've got the negative drift down into the space, because big money continuing to unwind their hedges from from selling the futures to sort of, or buying puts or whatever that they had to do. They're going to continue to unwind that.
Okay.
If that makes sense.
It does. It's options have always been crazy for, I think, a lot of people, because you buy puts to be short.
Yes.
You buy calls to be long.
Yes.
You do the opposite. There's an infinite risk.
Yeah.
You know, so there's people that are writing options that don't understand the risk in that. Can I ask you one question?
Of course.
If you were active yesterday, that move to the upside at the end of the day, was that something that you could have kind of picked out looking at these options positions?
Absolutely. Let me show you. I tried to snapshot every day what, open this. See yesterday. Oh, shoot, I don't have it. What I will normally do is snapshot the end of the day for the market tide. It was absolutely green from about 11 o'clock in the morning. Everything was green. The green line was moving straight up. My histogram was green and positive, and my net flow on the puts was just falling over. So everybody was buying into this number. And you could see it the day before. When you flip it back there, the put call ratio was like 140 something. It was huge in terms of saying, hey, this is definitely going to swing and move in the other direction. So absolutely, you could see it with the positions in the calls and puts there.
Okay, awesome. So we did have a couple of questions, and I think we may have already kind of touched on one. And it was, I understand that you incorporate option gamma concentrations in your trading. Please explain their influence in significance to day traders. How does the put call wall and the volume trigger influence trading? You really, basically, that's what we just went through, correct?
Yes, except when they talk about the put call wall, they're talking about it over several days into a big expiration number. You have to be really careful if you're listening to guys like Spot Gamma, who's an amazing guy, or Imran, who does the daily options insight. Both those guys are incredible, but they talk about things in terms of expiration dates, where the put wall might be in terms of where is it going to be at expiration, like on the 16th of December. What you can do as a trader is go directly to the chains and see where they're putting their money. Absolutely watch them and say, okay, are they selling this area? All I know is that they're crowding there, right? And I can tell from the formation if they're crowding, and I look at, how about we give you back the screen so we can see what the ES looks like. Let's talk about it in real terms.
Okay.
Looking at this, we know that underneath the covers, what these guys are doing is trying to push the market down. And so when we take a look at your charts, we can see that what they're actually doing in terms of real price is stalling, right? So do I have to stop my share? And there you go. Yes.
Yep,
Yeah, you can see them stalling right there in the spot. So you know that there's a battleground and they're pushing it up into these areas of specific interest. So if we take a look at the composite EFs, we're going to see the number 4093 to 4096 as a key resistance zone. It's going to be it's the composite for the monthly open. It's sitting right there at the 4090-ish. So I have no idea how Thinkorswim does it, but if we just look at the candlesticks that you've got sitting there, right? The current, can you see that?
So here I'm just going to take the volume profile and put it all the way over to the right so that we can
nice.
we can see that. There
Okay,
we go.
what we can see is the traders really trying to get that upper hand, moving the price back into the breakdown area. And let's look at that, what I would call that breakdown area, probably between 4100 and 4196, somewhere around there. I like to look at where candlesticks open and close. And so because of this number being close to a monthly open, remember, I will say, hey, what do you want to do? You want to go long, you want to go short. In the backdrop of my mind, I go, all right, I know these guys are selling under the covers. I'm going to try and sell the spike. I'm close to my monthly open on my composite. So if I try to sell somewhere between 4092 and 4096, I'm going to come in with that measure of risk that I like, with my stop at about 4100 to 4102. So I'll take something that's potentially half size. I actually am going to do that right now. So I have an order out at 40.95 for a short, and I'm going to give it 6.5 points and see if it'll come to me. Right? So that's what I'm hoping for. That's
okay,
where
we're joining you.
Okay, so for my biggest size, that's where I'll go. Now, if I'm looking at it and I say, wow, I don't want to miss out, I'll try to watch it get up there. If it doesn't come into my 40.95 and it starts fading like this, I'm not going to touch this for an entry short if it's coming in right at the edge of frontline support, which I think now is about 40.85. Right, so let's take a peek at where 40.85 is. Oh, it's right in that little valley where we're in there. And see, so I'm thinking to myself, that's right around that area that if we hold and head higher, that's going to be the floor. So if you look at, here's another thing. Someone said something about,
these are all lining up with nice little low volume nodes.
Yeah, right. And so again, key events, don't think about what you want to do. Think about what everybody else is doing and see how you can use that inside information to make yourself positioned to be in a space of minimal risk. That's always the thing for me. So someone was talking earlier, had asked a question about, hey, what about this risk reward business? How can I mechanize myself properly? I'm going to say the following. The very first thing is don't make a move if it's not near a big line in the sand. Don't do it. So you might say, well, gosh, I'm going to have to wait all day for a good trade. Well, do you want to take 4 bad trades that leave you feeling terrible about yourself, or wait around for 1 good trade that makes you go, oh my goodness, I think I understand process? I'm going to tell you psychologically, as someone who has absolutely experienced abysmal trading results, someone who was unbelievably terrible at this game, I'm going to tell you that one of the best things you can do is hold yourself accountable to process and pay attention to the big lines in the sand, so that you're not watching a YouTube video and you look back and go, oh my gosh, it just hit that level 3 points ago. Right? You've got to be drilled in, right? And that's going to help you manage your risk. Now, for me, for all the years that I've been doing as well as I have, I still look at something and go, what if somebody comes and does a sneak attack on me and I got to get stopped out? Am I going to be psychologically able to recover? Because I know what level of punch to the side of the head I can handle before I hit the mat. And I never want that to happen, simply because it makes the next day of trading very hard. And it also makes the current day really tough to slog through if that happened at, 9:37 in the morning versus when you go. So again, what I look at this and I go, oh man, it's going away from me. It's already 10 points from where I am. Well, guess what? That's a support zone. That 40.85 area, you're going to see buyers come in. I don't want to short that. I don't want to run into that. Now, how do I know that? I just put up a chart and I look. This is beautiful. Could you amplify the size of the current 30-minute chart and let me show you what's happening? Okay. Do you see 2 candles to the left, the low of that wick? How price action is coming right into that 40.85 and dancing around it and moving, right? That's the first place you're going to see buyers show up on a fade into the space. Why do I think the chart could still bounce? Because we're above the close of the prior candlestick. So what the traders are trying to do, imagine yourself as a fighter who's going up the stairs with a sword and you're battling folks. The very current candlestick that we're on, that's green, is telling you you're making headway against the sellers. And as long as you stay above that zone, you're in good shape. Now, you can also look at that and go, oh my gosh, it looks like the trade's left me behind. It didn't pop up to my 40.95. And now here it is. And it looks like it'll test 40.97, 40.79. And then, I've lost out. Roll with it. The market is a buffet and there's always going to be something delicious to eat. You just don't want to stick your hand in and grab, because, you could get 5-day-old salmon locks. Who knows? What
poked in the hand by a crab leg or something.
Yes, exactly. So you have to be patient and say, you know what? That was ideally a very nice setup off that ledge. But remember, you're the knight who's climbing up the hill. And so far, you are above the close of the prior candle. And that current candle is still making a higher low. So you can look at that and go, I don't want to short it here, because last time I was here, I had a bunch of buyers. If you say, yes, I'm going to short it here, then you have to go, well, where do I expect it to go? Do I want it to go to 40.73, 40.72? But see, for me, now I've slipped away from my ideal space to take the trade. And so I'm going to sit back and wait for the next opportunity. Does that feel bad? Yes, it does. But if we had started talking about this an hour ago, we would have been perfectly positioned for getting into that space and seeing that it's going to fade. Now, we already know from our backdrop and looking at those options that the traders are trying to sell the market down. Underneath, they're trying to sell the market down. You can see that from the flow. But again, because this current candlestick has a higher low, and there you are, climbing up the chain again, it's a space where you go, wow, I've got a lot of risk, because really I could go up to 40.96, 41.01, and this chart could still roll over. And I love looking at 30-minute candlesticks like this. Just imagine you are in a duel. And if we, let's say we went back one candlestick over and we're looking at the one that just closed, how would we have operated? While it's green and moving up, we would go, okay, well, there's my 40.97. I know that's a number I need to look at. But the moment we start losing the close of the candle, that is the great big down, that one right there. As soon as we lose that, we go, you know what? I've got a short and my stop is still around my 40.96. This market's heading lower because I'm losing the battle of going up the stairs, fighting my duel. I've slipped down a step. And so I'm going to watch that and take it in. And wherever it stops at the low and starts moving to the north, I'm going to get out. And that's going to keep me inside of the framework of, am I battling these stair steps of duels? Now, if you are somebody that says, you know what, I want to look at a 5-minute chart. 30-minute is too much. I want to trade this at a 5-minute. You can use that same stair mechanic. And if you look at it right here, you're going to see those traders. What are they trying to do? They're trying to hold these wicks. They're trying to hold these lows. You could see the buyers coming in. I mean, if you look at your dome, you are going to see them saying, hey, I'm going to try and take it here. I'm going to try and take it here. I'm going to try and take it here. Nothing wrong with that, but you can see that's why it's stalling. And you know the why, because, hey, everybody to the left, since I was here, everybody's been buying off of this space. And I have a higher low on my 5-minute, and there's my low, exactly, right? So if I hold this, let's say you're looking at the same thing and you go, you know, I think this is going to hold. Obviously, your stop is going to be where John has his cursor, right? So that's 6 or 7 points. You could certainly take a long there, because you can say, all right, everybody's bought here. I'm going to buy once it gets over this area, but I know for sure my stop is way down here. So you might go, wow, that's kind of a wide stop. I better just take one contract.
Right.
You're not here to
sizing.
eat an elephant in an entire day, right? You're going to have it a piece at a time. This is a long game, right? John and I are both gray hairs. We've been around a long time. And what we're telling you is this is a long game. So get good at it so you can go to the market, and when you need it, you can take the money that you want. So let's say you did buy because it came up over there and you look to the left and you're starting to watch it. What does it need to do? Well, it needs to get up over all these sellers, right? Look at the heavy congestion with the candlesticks that have long wicks and tight bodies. Come over just a little bit to the right side of the chart. Come down. Yeah, these guys right there. That's the next battle. But see, now you have your risk. And here's the great thing. Once you get in the body of the candle, you can move your stop up just below the low of your current 5-minute candle. Because now you're making headway. Now you're making headway, pushing through all of the slog that's sitting there. You're pushing through it, right? And so the goal is, let's see if I can get to the top of that range. But now, instead of your risk being 9 points or 7 points, whatever it is, now it's only 6, 5.5, something like that. And you just follow the flow, because all you're doing, just think about yourself as a swashbuckler, and you're just running through and heading up the stairs to the governor's mansion. So
I'll be D'Artagnan.
So you can steal a princess and ransom her for whatever. I used to play Pirates. Anybody remember that game? Pirates from the 90s. Holy cow. I played that all night long. I would play that all night long. It was such a great way. And you'd climb up the stairs to the governor's mansion. And the goal was to capture the governor's daughter and hold her for ransom. You would get all kinds of stuff.
That would be me. I'm Shrek trying to get
there you go.
Princess Fiona.
There you go. Man, I love those movies. I absolutely love them. All right. So you see, now you came all the way back. Don't be skittish, right? You got in at 79. Don't be skittish. It's coming right back up. Now, I'm sitting up there at 40.95 for short.
Mm-hmm.
That's got nothing to do with your current trade right here going long up this chain. Again, think about these candlesticks as people fighting for position, and you have the sensibilities of, wait a second, if I just made a newer high relative to my low that I just made over there in the corner at about 9:30 Central Time, and I'm sitting here, hey, I'm trying to push to the north. So here we are with the next group.
And here we go.
You're still holding, right?
Yep.
Now you can go, well, you know what? Had some sellers up there. It might push a little bit higher, but I might want to take some profit at 85. There's your 6 points.
Mm-hmm.
And you know what? If you just had one contract, that's still good money. You don't have, somebody left a note that said, wow, I'm impatient. I got 30, 40 ticks.
Right.
And then, I see it run. Listen, it doesn't matter if it runs. Okay. What you have to do is learn to make decisions based on, hey, 40 ticks, is this appropriate? Right? To me, if I'm carrying, I expect this chart to come up to 40.95, which is why I'm still waiting with my short, right? So you could say, I know there's some people up there waiting at 40.95. So instead of getting out at 85, I'm going to move my stop to break even. And then I'm going to watch it. Let me see if I can get to 90. If I can get to 90, but I can't get over, I bet that 40.95 that she's got up there won't fill. Now, how do you know I have a trade up there? You know where the monthly open is.
Right.
That's how you know. Because somebody with me, like me, that only uses big numbers to enter into a trade is going to be positioned there. But do you see how just looking at the candles, you're not looking at momentum. You're not looking at anything except what did they do? Did they try to hold higher? Did they try to hold lower? And what's happening in this candle right now?
Mm-hmm.
And
You're in the now.
See it exactly. And that's really, a lot of traders have a ton of problems sitting in the now. It's all about, well, what's going to happen after? It doesn't matter. It doesn't matter. What's happening now that can let you go, wait, see, I saw in that 5-minute candlestick formation a lot of wicks, but everybody bought them. There's no candlestick bodies down there. So if everybody bought them then, and I pressed higher after I got out of those wicks, if I start holding that candle down at the edge, I can take a long. Right? And if you moved your stop to break even, now you're getting to that 90. This is where the rubber's going to meet the road. Right? You
Mhm.
could be saying to yourself, well, I think this is going to go all the way back up to 4,100, which
Good.
you could certainly say, hey, I'm going to hold it there. For me, as an intraday trader, trading a 5-minute chart, this would be a scalping mechanic that I would use,
Right.
just like the one. This is exactly what I would use from a scalping mechanic. When it comes into prior support that turned to resistance, I'm going to get out. It doesn't matter to me if this chart moves 10 more points.
Right.
I'll just make another setup and go in then. But right now, it's telling me you better get out at 90.
Right. It's your plan to get out there. It doesn't matter what happens afterwards. Anything after that
Exactly.
is a new opportunity.
Exactly. And I know a lot of folks go, hey, but I'm leaving money on the table. Yeah, that's fine. If you looked at the chart and there was no reason for you to get out after 30 or 40 ticks, then you've got to manage yourself. But if you come in and you go, wait, old support, new resistance, I'm going to take profit here. I am. There's nothing wrong with that, just so long as it's a process that's telling you, I've got to take some profit. If you follow your process, the money will follow.
Right.
All over. It's okay to leave money on the table. It's not okay to trade scared.
No.
But it's okay to leave money on the table. That's totally different.
Well, we're not going to buy the low and sell the high ever.
Exactly.
You got to get your bite out of the middle.
Exactly. Oh, wait. Now I get a fill. Oh, sticker.
We did.
I didn't get a fill.
95.
Ah, there it is. Just got it. All right. Well, that's great.
Yeah. We have gone a little bit long, Anne-Marie. I hope it's not an issue or a problem, but
no problem at all.
we should probably let you get down to business and let everybody do their thing. And let's do this again soon.
Me. Yeah, absolutely. Absolutely. I love it. I love trading.
Me
I love
too.
trading. I love the bar. I know, it's so fun.
It's amazing how lucky I sometimes feel that we get to do this for
I know. That's
like
how
not
I feel
work.
too. Yeah. But thank you so
Sometimes
much for having me. Hopefully everybody got a good feel off of what we were doing and talking about. Value the questions. John, if you have any follow-up questions that they send, happy to write a little something and put it up wherever you might have.
Awesome. That would be good. I know that there's a few that we probably didn't get to, but that's all right. We'll do this again. Got a nice short off that 95 level.
Yeah.
Nice job.
Yeah, we take it one step at a time and just, remember always that the markets don't go places arbitrarily, always someplace specific. So look for those edges that might be specific and play them there. Don't jump in just because, it just moved over or it just moved under. Yeah, things will work out a lot better.
Or I think maybe.
All right. Well, you take profit wherever you see fit. My first thought is, I think it could go all the way back down to that 40.79, but we'll see.
Yep, we will. Yeah, I think that looks like a good opportunity for us. We're starting to get a little bit low volume there. Looks good to me. Anne-Marie, thank you so much.
My pleasure. Thank you, everybody that came and stayed and watched. Just love sharing ideas in the market.
Let's do this again in January.
Yes, I'd love it.
Sounds great. Anne-Marie, have a great holiday season. Blessings to you and all of yours. And thank you again for joining us. All of you that came today, thanks you for joining us. If we didn't get to your question, I'm very sorry about that, but we'll work on that. And we'll see you for the recap today. And have a great rest of the trading day. Some opportunities are out there. And again, Anne-Marie, I can't thank you enough.
Thank you. See you guys later. Bye-bye.
Bye.